welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading action, the trading setup, and the strategies you need to follow for today. Remember, it's Friday. It's the last day of the week, but it's also the last day or the trading session of the month. That's March, the last trading session of the quarter, and also the financial year 2025. So it's a very important day of trade. What we will be really looking back is to see how the markets have performed in FY25. What are the key parameters we need to look at, and how do things really shape up for the year to follow as well. But let's also look at the immediacy as well. As of yesterday, the equity markets did end the March series yesterday, remember, on a healthy note. We did see the Nifty reclaim about 23,500 mark. The index bounced back on Thursday after a day of weakness. We've actually seen the autos and the auto ancillary stocks come under pressure. This was largely due to the Trump tariff talk on the auto and the auto ancillary imports, and that's dragged down the auto index. But some of the sectors continued to manage to push the Nifty higher. Banks, financials. We also did see a whole host of other sectors contributing to the move. Even the broader markets definitely supported. What also helped markets pull up in trade is the shift in stance that we've been seeing for the FIIs, combined with the strength in financials and majors, banking names, rotational support from other heavyweights also sustaining the positive momentum. But of course, US tariffs continue to be a big overhang right ahead of the big April 2nd announcement. As the trailer has already been, we'll have to see how things really shape up. The FII data is in front of you. Hard to believe for some, 11,111 odd crore rupees of buying coming in from the FIIs as of yesterday. They have remained net buyers for the last 6 consecutive sessions. We'll just have to wait to find out whether this is now the new trend and a reversal in their earlier sell-off strategy. What happened overnight? Well, we've seen the Dow Jones, the S&P 500 end lower in trade again. Pressure continues with US, Trump tariff talk that we have been seeing. We've also seen the Brent crude levels also continue to inch higher for the third consecutive week. $74 a barrel for crude oil. And we're also seeing gold prices with this uncertainty emerging, again hitting fresh record highs on the international level. $3,075 an ounce is something that we've already seen for gold in the international market. Asian markets did see, a sell-off right in the morning trading session. This is right after the US equities, fell overnight. There is this upcoming reciprocal tariff fear that is continuing to bog down or weigh on the sentiments across the global market. So Asian markets also trading lower. Japan very weak, about 2% lower in trade. We've also seen Kospi down by 1.4%. Other Asian markets also somehow weak in trade. Let's look at, the gift Nifty also. That's indicating a muted start for the day. And that's something that you need to really look at as well. So that's something that we will be focusing on. Probably 746 odd levels is what is being indicated by the gift Nifty trends too. Let's actually now welcome our guest on board. We are now joined by Mr. Mayuresh Joshi, who is joining in on this program with us, Head of Equity Research at William O'Neill India. Warm welcome, Mayuresh. Good to have you with us. Well, it's a special day, the last trading session, like I said, for the week, for the month, for the fiscal year 2025. We were sifting to the data. Some of that was also getting reflected on the screens for people to understand. FY25 has actually seen a very less return as far as the Nifty is concerned. Only 5% of positive move is what we've seen for FY25. Many would argue that this is lower than their fixed deposit rates. So what really happened? What went wrong? When we compared Nifty returns to other indices, US was better with 7% returns, UK with a 9%, China with a 12%, Germany with a 25% as well, is what we have seen. So in comparison, we have fallen short of expectations there. Among the key sectors, we've seen financials, healthcare, Metals top the charts for this year with 12 to 18% kind of moves. Whereas on the downside, we've seen energy, oil and gas, realty indices fall short of expectations. Gold and silver, 31 and 33% respective returns is what we've seen for FY25. So asset class wise also, we've actually seen Nifty underperforming. Tell us, Mahesh, what went wrong for equities in FY25, and are we somehow looking at a better, FY26 to pan out from here on?
Morning, Sakshi. So I think three factors. One, I think macros, both global and local macros. So in the first place itself, the running inflation across the world was a cause of concern, which caused a spike in bond yields for the better part of calendar year 25. On top of that, what we really saw in the Indian context were monsoons, abrupt monsoons at some places, flooding in some areas, in some states, elections, which largely occupied a large part of the calendar year that has gone by, and earnings, which were growing in the last 2 years in excess of 20% had a typical year of slowdown, which means that on a higher base, they started obviously growing a little bit slower. Obviously, consumption had started coming off because inflationary pressures were also playing in the Indian ecosystem. For a whole host of these factors, as I said, liquidity had gone off. There were obviously abrupt rains. The capex from the government side had gone up as well. Now, as we enter the first half of this calendar year, in the first quarter, which is just finished, obviously we've gone through a whole host of global news as well. Trump tariffs, which are expected on April 2nd, the expectations in terms of inflationary pressures on the global economy still expected to continue. At the same time, you're probably seeing demand globally is still seen very, very soft. And therefore, I think how will the global economy recover is something that the markets were worried about. On top of that, from a micro perspective, earnings had come up. So in this entire context, I think the markets probably underperformed over the last couple of quarters. But going forward, I think earnings will hold key for the markets. My own sense is that Q4 will still remain soft. But with the tax cuts and the budgetary announcements that have probably happened, the first quarter and the first half should start seeing significant amount of consumption expenditure coming back into the system. And therefore, corporate earnings for a large part of market expected to bottom out. The government capex has started happening in real earnest, and therefore investments from the government side should start flowing in. A combination of these factors should probably lead us to believe that private capex should come back in the second half. And therefore, Sakshi, my own belief is earnings largely, as we end quarter four, should bottom out. Political stability, regulatory governance, with RBI providing ample liquidity to the market, and in our own context, expectations of a bountiful monsoon with La Nina conditions evolving, will mean rural and urban consumption coming back. So I think all positives that I probably see for India at this.
Okay, so those are the positives that we are looking forward to. Where do you think that can take the Nifty to now? I mean, we're already looking at this hurdle of 23,800. Sooner or later, this could get breached and 24,000 could be upon us. But where from here do we go? I mean, do we test the previous highs of above 26,200? Do we further move on higher from there? Or do we keep very, very moderate expectations this year?
No, so I think this year is going to be news-driven, right? Even the next few weeks, next few months is largely going to be news-driven. And therefore, moderation of return expectations is something that investors should probably take in their stride. But again, I think this year is going to be a stock pickers market. I think if you have the right sectors in place, the right stocks in place, my own sense is that you can still make a reasonable amount of return in the market. But yes, moderate your return expectations. But I'm still keeping my fingers crossed, Sakshi. I think that by the time we hit the end of this financial year or calendar year, we might get to those all-time highs. As our founder has always said, right, I've never met a successful pessimist in my life.
Yeah, absolutely. Hoping for those erstwhile highs to come back. You did mention that it's going to be a stock pickers market for FY26. So we have to keep an eye out on the right sectors and the right kind of stocks. Let's talk sectors first, and then we'll come to the stocks. So sectorally, we've seen for FY25, financial services, healthcare, services sector, metals outperform with double-digit returns, whereas, the commodities basket, energy, oil and gas, that has fallen short. We've seen realty also after a couple of years of gains give up some of those gains. So that's also softened a bit. For FY26, what are going to be your top 2 or 3 sectors that you will bet on?
I think the consensus goes still with banking, right, Sakshi? And the assumptions here are that as Q3 numbers have played out, I think a similar performance can be expected in the next few quarters as well. You had seen a large part of CASA deterioration actually happen on bank balance sheets. That should now probably plateau out. And the expectations in terms of advances growth, deposit growth normalizing, expectations of asset quality pressures which have come off, stabilizing at the current juncture, and in fact, even improving going forward, which is a big positive from a bank perspective. The ALM part of the business, the expectations of NIM stabilizing. And at some point of time, I think interest rate cut cycle, if one really believes in the second half expected to come through, might also has a positive trigger. So yes, financial services probably remain top of the rank in terms of ratings, rankings from a sectoral perspective as we see it. Within healthcare, again, I think our own sense is that hospital stocks might continue doing well. What they've probably delivered till Q3 for 9 months FY25 have been pretty reasonable, pretty strong. And in our opinion, I think the kind of bed additions that they're probably doing, the asset-light model that they're probably approaching, ensures that not too much leverage built on the balance sheet. As utilization starts improving in terms of their bed sizes, the ARPOBs, the ALOS, the average length of stay is expected to go higher. Medical tourism is a huge aspect as well. And therefore, within healthcare, I think hospitals might continue doing well. The third play that we're probably looking internally is domestic rural-facing sectors, which might include agrochemicals, it might include a part of specialty chemicals, it might include part of fertilizer companies as well. And a few companies within the broader market that might actually benefit because of rural discretionary spending. And therefore, this pocket is a very strong pocket where we believe the Rabi season, which has just gone by, the harvest was pretty strong. As I'm time and again mentioning, if La Nina conditions evolve, you're going to see bountiful rains, which means rural economy, which is coming back, should come back even stronger. And that will give an impetus to the next Rabi season, which might be equally strong as well. And therefore, the next few quarters might actually be boding well for this segment of the market as well. So I think these 3, 4, 5 sectors actually might do well.
Okay, we'll keep in mind and keep a note of all these top 2 or 3, 4 sectors that you've named, and we'll concentrate our focus there. But how does one really go about selecting stocks in this space again? A lot of consensus has built up at the beginning of the new calendar year that large caps, this is going to be the year of large caps, blue chips, one will be safer with, even if the Trump tariff talks or googlies keep coming from external shocks keep coming, there'll be these blue chips that could hedge your portfolios. So how does one really go about it? Do you also believe that it's the large cap story that will play well?
No, our sense is that you should probably have a good mix, Sakshi. I think large caps will no doubt do well, but I think there are qualitative mid caps which have leadership positions. And we always believe in leadership stocks at Markets with India. I think there are qualitative leadership mid cap stocks as well, which can really do well. Within all these sectors that I'm just mentioning. And then I think a mix of large caps, a mix of leadership mid caps, and again, a multi-asset disciplinary approach should be mandated, like I've time and again discussed on the show. A little bit of bonds, a little bit of gold should always be part and parcel of your portfolio.
Absolutely. Gold and silver, do you think beyond this 31, 33% kind of moves will have, further sheen to them?
Quite possibly, because I think if the volatility continues, it might just remain in focus with all that is happening and all the transition that is happening in the globe. And again, I think this is a hedge that we are probably doing as a portfolio, Sakshi. It's not an investment thesis with a small allocation of gold that probably happens. It's a perfect hedge in terms of the riskier asset classes that you're carrying, specifically equities on your portfolio.
Okay, you can actually see the silver and gold prices, how a year back they were faring on the screen and how they are standing today. I mean, there's a 20,000 rupee kind of a jump on both gold and silver. That's the kind of move that we've seen, and there could be further move on the higher side. We have Mitesh Panchal joining in to track the technicals for us. Mitesh, warm welcome, good morning to you. As we bid goodbye to FY25 and welcoming FY26. We've been discussing the key factors that have driven the sentiments and what will go forward. Mayuresh believes that we could very well test the erstwhile highs by the end of the calendar year. On the Nifty 26,277 and beyond. What is your own sense? Finally, this move that's coming back into the markets on the recovery side, where will it take Nifty to?
Good morning to all the viewers. Now, the experience is like this, that if basically you are not that bullish for a particular year, then that year will give you a surprise. So I think 2025-26 financial year will give us a lot of surprises. And in that case, our experience is that whatever you have decided that, for example, this sector will not work, that is the sector which will give you the maximum gain. So on the contrary, what we are figuring out is that where we have the low conviction in terms of themes and sector for the current year, for the next year. And that is where we would like to keep an eye on, because the sectors which we think probably will work will always give us an extraordinary disappointment. That is what we feel, at least for the year 2025-26. So we are here to take a contra bet. We will first discuss about those sectors which are probably not going to give us that kind of an extraordinary move in the... That's what we believe will not give us the extraordinary move. But I think they will. And the first sector which come up in my radar is the entire PSU. Last year, I had a view that the PSU sector probably will take much more time to come back. But I think that in the year 2025-26 as well, financial year, the PSU theme will again come back from the table and give us return. That is what I feel. So I think PSU is where we are looking at.
PSUs is what you're looking at. Would you look at defense railways or would you look at power PSUs? What would that concentrate to?
So as far as PSU are concerned, first of all, we are looking at stock like BHEL, BEL, HAL, again the entire basket of Mazagon Dock and Kochi Shipyard, particularly PSU Bank as well. So the list is very long, but I think even NMDC is looking pretty interesting from a chartical viewpoint. NTPC is looking pretty interesting, and the most important stock which we feel will surprise going forward is the Coal India. So I think these are the boring names and boring themes which we feel that in the financial year 2025-26 will definitely perform well.
Okay, choose boring stocks for FY26 is what Mitesh says, and then that will probably do the wonders for your portfolios. Let's look at the key stocks that outperformed in FY25. On the Nifty, we had names like BEL again, 49% of returns. We've seen M&M, 43% up, Shriram Finance, about 42%, Bharti Airtel, 42% uptick, Trent has given a 35% uptick. In the Nifty 500 basket, what's gone up is PG Electroplast with a 424% uptick. Despite the Nifty giving only 5% returns, you've really stuck on some key stocks. You've made massive money. JSW Holdings, 196% higher. Mazagon Dock, as Mitesh was penciling in again, 184% higher. Transformers and Rectifiers, 148% up. Wockhardt Pharma, 142% higher. Mayuresh, out of these, do you think there will be any repeated names for FY26 in the same list?
Hope was that if somebody had these 10 stocks, I think he would have at the year of his life, right? But yeah, I think I agree with Mitesh. I think a few of the defense names on the PSU front might actually do well because irrespective of what happens in the globe, I think these guys have a fantastic order book. They've got revenue visibility over the next 5 to 6 years. And therefore, I think shipbuilders might actually come back in focus. Mazagon, Cochin. And the reason is very simple, Sakshi. I think if you look at the big macro picture, right, out of the entire fleet size in the globe at this current juncture, 40% of the fleet size is more than 20 years old. So typically in an industry, 25 years, I think the decommissioning probably happens, which means most of the ships will either come for repairs or there will be new ships that might need to get built in. And therefore, shipyards will come back in focus very, very strongly. Whether it's the Indian shipyards, the Korean shipyards, or the Chinese shipyards, there will be bountiful amount of demand that will be required. And therefore, I think the rating rankings, the expectations of earnings growth stability might actually probably reflect in shipbuilders within the defense pact actually doing well.
Okay, we'll keep an eye out on all these shipbuilders. 1 minute to go, and then we'll focus on today's market scenario. But before we do that, Memorish, FII sold off over 4 lakh crores in the Indian equities in FY25. But, last 6 days they've been buying. And yesterday's number was hard to believe. It was 11,111 crores. So do you think finally they are turning, back and returning to India yet again? And what will be your expectation for FY26?
तो मेरा एक ही कहना है कि अगर आप इंडियन मार्केट से दूर रहोगे तो यू मे मिस द बेस्ट मार्केट इन द वर्ल्ड सो दे हैव नो चॉइस साक्षी वेरी फ्रैंकली आई थिंक दे शुड स्टार्ट कमिंग बैक एंड दे हैव ऑलरेडी स्टार्टेड
Okay, fantastic. All right, let's focus on the markets. It's 9:15 and let's get back to today's trade and we'll focus on what to look forward. 23,616, slightly better off than what the GIFT Nifty trend was indicating. So about 0.1% of an uptick is what you could actually see here. When let's look at the Nifty Bank also, and let's also look at some of the other factors. Remember, yesterday it was the banks, PSU banks, financial services, all of them supporting. The Nifty Bank is higher by about 0.2% as well, 51,662. So positive start on both these benchmarks. Let's also look at financial services also indicating a higher start. Let's look at the Nifty Midcap and the small caps as well. PSU banks are doing well too, carrying on with the momentum here. So let's look at the broader markets as well. 0.8% higher. So that's where the move is really coming in from. Today's supporting sentiments on the broader markets, about 1% higher for the small caps. These are the pockets that are taking the lead in today's trading session, and that's a bit of a positive as well. Even when we look at, so autos continue to decline. We have 0.2% of a fall after yesterday's drubbing. Some softness continues, 21,471 on the auto pack. IT pack is also on the downside, about 0.2% odd or so. But the major indices, Nifty Sensex, the Nifty Bank, mid and small caps are all higher. Advanced decline ratio is also skewed towards the positive, so that's good. 1179 stocks on the positive side, 403 on the negative side. But it's pharma that's soft with the negative bias, auto, IT, that's also just slightly softer in trade. But let's look at the stocks. Let's look at BSE. That's the stock to watch out for today. We haven't discussed that, but we'll discuss it now. 9% higher, 5,105. BSE is coming back in a very, very big way. And this is right after SEBI's consultation paper came in saying that you only have to choose between 2 days, Tuesday and Thursday, when it comes to choosing the expiry session. Remember, before this, NSE came out with an announcement saying that they want to shift the expiry session to Monday now. And that will now change. The NSE will have to change because the SEBI has clearly said that you, as an exchange, only have to choose either a Tuesday or a Thursday when it comes to the expiry session. And that's something that you should be really looking at. Remember, BSE has already shifted it to Tuesday. Now remains to be seen whether it can be the same day for both exchanges. If it does not have to be that, then what happens to the volumes? There's already a BSE up move that you're seeing at 9% higher in trade. Mahesh, quickly, could you tell us what does it mean for Bombay Stock Exchange stock? Finally, this clarification coming in. This one upman that, NSE was trying to do, take all the volumes from BSE. That's not going to happen. What will now happen on NSE? IPO also. I mean, there is an expectation that that will also get delayed too. What will happen on BSE?
No, I think so. That was the reason why the stock fell, right? And that is why the stock started recouping, because I think there were expectations that this might actually come through, and this has actually happened. So the expectations of a market share loss and an EPS cut because of the market share loss, anywhere between 12 to 15%, actually got reflected in terms of the fall in absolute terms, which happened on the stock. So I think all that recoupment is coming back because there might not be any market share loss per se. It might come through no earnings hit per se coming through as well. The bonus announcement that they've probably done also is giving impetus to the stock.
Okay, what about you, Mitesh? How would you look at the market opening and what's your call on BSE today?
As far as BSE is concerned, I think the stock has run up very fast from the recent low. So with a gap up of close to 10%, I would advise the clients to book the profit, because there are strong chances that the stock will again test 4,500, 4,800 band. So at 5,140, it's an excellent price to book the profit. No need to short this stock, because many people will believe that probably 9 or 10% upside will not sustain throughout the day, and it is an excellent time and idea to short the BSE, but that is not how one should approach the stock. So advisable not to short if you are already long, book the profit. Not advisable to go long also at the same time. As far as market is concerned, I think it's a muted start, and let us see how the next 30 or 40 minutes pan out. Then we'll take a call about the direction, because since it's the first day of the new series, so probably market will take some sort of a time to get adjusted. So let us wait for the first 15-minute candle, half an hour candle, and then we'll decide on which way one should take the call.
Okay, got that. Let's actually look at what's buzzing in trades then. Let's look at the heavyweight counters within, Reliance Industries, the banking names, HDFC, ICICI. Let's look at Axis also. Let's also pull up some of those stocks to see how they are really trading in trade today. So 1286.6% higher. Reliance is in the positive zone. You have Axis, that's also a higher in trade. Let's also pull up some of the other stocks, ICICI, HDFC, see how the move is shaping up there. And let's also pull up in terms of various sectors, some of the key stocks that we can mark in trades today. So Nifty, top movers today are Tata Consumer Products, ONGC, BEL, Kotak Mahindra Bank. You also have Geo Finance. Remember, there is this change in the Nifty reject that's happened. So Zomato, Geo Finance are now a part of Nifty, and that's also taking in the valuation of Nifty bit higher, because these two stocks are now higher valued than the ones that they have replaced, BPCL and Britannia. So the Nifty index valuation also just moves up a tad bit. Mayuresh, how would you look at the Nifty now? Valuation was again earlier a question, and now with these two newer stocks getting added on, there'll be some more uptick there. Does it worry at all?
There shall be an uptake, but again, I think you need to probably look at the context in terms of the resetting which will happen, right? And therefore, I think if one really assumes with the new constituents coming in, what is the Nifty EPS that will come through for FY26, FY27? Hardly a change that I see, right? And therefore, I think the consensus EPS numbers should largely be stable. Obviously, I think in terms of the delivery of numbers for Zomato, because I think there has been an excessive front loading that will happen. Profitability is going to take a hit, and Jio is still to kick off significantly. So to that extent, I think the EPS moderation will be considered by the street for the changes that have probably happened. Might look expensive with the new constituents coming in, but in the bigger picture context, my own sense is 27 EPS numbers, the moderation might not be too much, which will cause any kind of jitters as far as overall Nifty valuation.
Okay. What about you, Mitesh? How would you look at Geo Finance and Zomato as of now? Charts, are they looking better?
As far as Zomato is concerned, I think, technically it looks good only above 215. So 215, if the daily close is above 215, then definitely it's an excellent buy with a stop of 203 for the potential target of 230, 240. As far as Geo Finance is concerned, the stock is also consolidating at the current level. But within this two, if I have to pick technically, I'll go with Zomato with the condition that the stock should give a close above 215. Geo Finance, I think once the stock start trading about 235, 240, then only we will get the extension of the trend. So again, in that case also we'll have to look at 240. But the only difference is that in case of Zomato, 215 a daily close, and in case of Geo Finance, 240 a weekly close. So that is the only difference. Otherwise, yes, within these two, if I have to pick one stock, I'll go with Zomato.
Okay, got that. Let's also shift focus to the auto space that was largely in news flow yesterday. Of course, there is this Trump tariff talk that's been weighing on. But at the same time, internally, we are seeing a lot of defense contracts being extended to Bharat Forge, to Force Motors, to M&M now. How does one really navigate through the auto space as of now, Mayuresh? What's your call there?
My own sense is that the trade data got released yesterday for the US, right? And the 2-month trade data was one of the highest at $302 billion, which means that a lot of companies across sectors have been front loading a lot of their inventory.
Yeah.
So surprisingly, I think there is not one company in the US that makes a car which is 100% US, right? So specifically, I think the entry and the mid-level cars, whether it's a Hyundai, whether it's a Kia, are all
Yeah.
manufactured outside the US. And therefore, I think to have these tariffs probably looks untenable at these levels. And therefore, some moderation might be expected. But I think April 2nd and a few weeks after that will probably lay a path for that. Obviously, I think in the context of India itself, I think demand obviously has just waned off a tad bit. You've seen consumption patterns come off. Because of input cost increases, prices of cars have actually moved up. M&M have taken hikes, Maruti has taken hikes as an example. But again, the new models that are expected to come through, the expectation here is that even if competition intensity probably stays put for the market as a whole, I think there is going to be exciting models coming in at very, very attractive price point with a lot of content, with a lot of features coming through at the price points at which they are getting offered. And therefore, I think even if you've seen a quarter or two of moderation, the next quarter or two might also be of moderation as well. Second half, in my opinion, will be a year where the recovery will start taking place for a whole host of these stocks. Till that point of time, in my opinion, again, and as we see it in terms of our ratings and rankings, two-wheelers a tad bit better placed. Within two-wheelers, TVS Motors, tad bit better placed as well. Again, rural recovery, margins have remained stable, expanding into new geographies. New models probably expected to do well, specifically on the electrical mobility platforms. And therefore, this is one stock that can continue doing well. Farm equipment stocks can actually perform well. Again, coming back to the rural theme, a little bit biased here, Sakshi. And here again, I think stock like Swaraj Engines is something, in my opinion, has performed a stellar set of numbers till now. Can continue doing well, at least for the next few quarters as well. Stable set of growth from a volume perspective, margins perspective, balance sheet is strong, promoter pedigree is strong. And therefore, I think TVS Motors and something like the Swaraj Engines might actually continue to.
Okay, we'll note all of those stocks down. The mid and the small caps are soaring higher, so let's keep an eye out on both. Both are over 1% higher now. Smart moves that can be seen. Let's look at the mid caps, of course. There's NHPC, Hindustan Zinc, there is Aditya Birla Fashion Retail, RVNL, Vodafone Idea also ticking higher, Irida, Cochin Shipyard, SJVN, Suslong, a lot of them that are buzzing in trade. As far as the mid caps are concerned, let's also pull up the small caps to 1.3% of an uptick on the index itself. The names that are doing well, again, renewable energy names, a lot of them coming up. So it was Suslon earlier, now it's Inox Wind in the small cap space, that's also higher in trade. BEML, of course, after that yesterday's smart move of 15% is another 4% higher in trade. Zentech, Naveen Fluorine, MCX, Railtel, CDSL, Angel One, even the brokerage related stocks and capital markets related stocks, exchanges, all of them are up and about. BSE, of course, leading the entire show there. So lots of interesting names there. Mitesh, first to you. Mid and the small caps, smart rebound that can be seen and the recovery that's coming in. What's your call on these two spaces for the new fiscal year? And would you have a select stocks from this pack?
Yeah, as far as again, Sakshi, coming back to the boarding point, I think what is looking pretty interesting to us from the risk reward viewpoint is the entire PSU pack. So NMDC is looking good, SAVN is looking good, Coal India is looking good. Within the private, some of the private players, I think now some of the interesting names are coming up on the surfaces with respect to the mid-cap IT, that is HFCL. I think that stock is a very interesting price. So HFCL is looking good. Again, the entire broking theme is looking very interesting. So Angel One is looking interesting. Motilal Oswal is looking interesting. And one of the sector which has not performed pretty well in the last year, which I think will give us a complete surprise in the coming year, is the entire FMCG space. And within that, we are extremely bullish on two stocks. First is a Nestle and second is ITC. So I think within this space also, these names are looking pretty interesting from the risk reward viewpoint. And we are of the view that there are strong possibilities that in the first quarter, the entire FMCG pack might outperform the market.
Okay, got that. Mayurish, coming to you. We've discussed quite a bit of what to invest and how to strategize your moves in the new year. What to avoid in FY26? Where do you think people can get trapped?
Well, I think, as I said, I think a few of the spaces like autos, right? The moves can come through, but they might come at the latter half of the financial year. So I
Okay.
think being a little bit aggressive here might not make sense as we speak. IT is
Okay.
something that I'll ideally like to watch out for as well. Beaten down, solid profit booking, price ratings have come off significantly. But how will Q4 play out? What do managements feel in terms of discretionary spending patterns? What do they think about the margin performance, pricing? I think all these things need to get answered, and therefore IT is something that I'll also watch out for from a sectoral perspective. Apart from that, as far as the capex themes are concerned, one really needs to be a little bit more selective here because I think not all capex themes might actually work this year for markets.
Okay, well, on that note, Harish, we'll thank you then for being with us on this special edition today. See you in the new fiscal year, and we'll get a lot of those interesting ideas going for our new, audiences and, of course, all our viewers in the new year as well. Hope you have a fantastic time till then and a great weekend and a long weekend. What are you doing?
No, off to Pune, so I've got a function to attend. So that's
Okay,
what.
I will see you in Pune. Then I'm coming tonight to Pune as well. We have our golf event tomorrow that everybody will be able to watch. I'll see you there.
Perfect. So I'll catch up on Sunday with you in Pune.
Okay, so that's where on air also programs get made. Have a happy weekend to you as well. Let's continue our conversation with Mitesh then. Mitesh, interesting names that we've been discussing thus far. I want to understand what about renewable energy names? Those are flashing today. Some are coming back in flavor, the likes of Suzlon, Inox Wind. These names are coming back. What is your sense here? Is this a space that will also outperform? Of course, summer season, it's starting, so the entire power theme that could also play out.
Yeah, so again, I think in this space, Shakshi, much of the retail participation is taking place, right? So I think we need to be very careful because this is our past experience that once these stocks are moved by 5 or 10%, generally they attract the selling pressure. So I think I am of the view that let us wait and watch for this space. The interesting fact about the entire meltdown which took place recently is that, Sakshi, as I said earlier also, you get a chance to basically reset your strategies. And I think what is looking promising right now is something which is actually not looking promising. So I think rather than playing these kind of things, I think advisable to play where the visibility is more, where the risk reward ratio is very favorable. And I think in the entire PSU pack, these are the comforts which we are getting. So I think time and again, our focus moves to that space only.
Okay, fair point. Let's look at some of the other spaces that are seeing some buying. The FMCG plot products are also coming back. Tata Consumer Products, Britannia, Colgate, so on and so forth. This has been a so far laggard space. But let's remember, Mitesh, 1st April onwards, this space could get into focus, remember, because of the tax cuts announced in the budget will start to kick in now in 1st April onwards. So finally, people will get that extra money in the hands. So will it be FMCG? Or will it be the large consumer durable players that will get the benefit of this extra money? Where do you think one should play that consumption theme?
Yeah, interesting questions. We split into two parts. I think more important thing from our perspective is that where the risk reward ratio is favorable. I think in pure FMCG names, the risk reward ratio success is very favorable. So we are absolutely upbeat on Britannia, ITC, Nestle, Coal India, Colgate, Tata Consumer. Yes, and barring that, I think one more interesting stock within the second thing which you talked about consumer discretionary is, I think, Titan. The reason being is this that the Titan has been badly sold off in the recent past. So I think you will see a vertical rise in Titan as well. So I think what is not looking promising in 24-25 is extremely looking promising in 25-26. So yes, FMCG one should not miss. And as I said in my opening remarks, in the first quarter, that is April, May, June, you may see a significant up move in the entire FMCG pack.
Okay, got that. So we'll keep an eye out on that as well. But let's also focus on some of the other pockets. The capital markets related stories are also coming back. We talked about BSE, of course, because it has an immediate news flow to react to. But even the others that were the erstwhile favorites are now showing tad bit of recovery from their recent lows. CDSL, Angel One, MCX for that matter, other broking related stocks like Geojit or 361 WAM and others. So the entire space is again coming back into flavor. What's your top favorite in this?
Yeah, so I think broking theme will broking and exchanges will play a significant role here. So
Yeah.
IEX, MCX, Angel, Motilal Oswal, we play a significant role in terms of creating a short-term wealth, or what we're talking about is like a swing trade where you can get
Mm.
anywhere 10 to 15%. So these are the four names where we are upbeat: IEX, MCX, Angel, Motilal Oswal. So I think technically it is looking promising, and from here on one can see at least 10 to 15% upside in next 1.5 months.
Okay, fair point. We'll keep an eye out on that. But one more aspect that I forgot to discuss with you. I discussed a bit with Mayuresh on the gold and silver, performances. He says that even despite that 33% move that we've seen in the previous fiscal year, the current one, FY25, there is an onward journey that we could continue to see on both these aspects, and that's because of the uncertainty that we are gripped with globally. Should one play gold and silver through the equity route? Should one look at stocks like maybe the jewelry stocks like Titan or the gold finances like Muthoot and Manappuram? What would your choice be here?
Yeah, so I think when you're discussing in the opening remarks, I would just like to add one point. So thank you for raising this question. Sakshi,
Yeah,
let me give you an interesting data point. If I tell you in 15 years' time,
yeah.
what has out, whether it's an equity or gold,
I
it's
think
gold.
it should be equity, no?
It's gold. Okay?
It is
So
gold on a 15-year
yes,
basis.
let me give you a comparison. In 3 years, gold has given 16.8% return versus an equity 11.6. And here, when we are talking about equity return, we have considered Sensex. 5 year, gold 14.4, Sensex 14.6. 10 year, very interesting. Gold 12.5, Sensex 9.9. And here
Wow.
comes the magical figure. 15 year, Sakshi, gold 11.5% CAGR, Sensex 10.3% CAGR. How many people know this?
Not at all. That's a very interesting data, Mitesh. Our brains are ingrained to thinking that, over a long-term period, it's equity that outperforms all the other asset classes.
Okay, let me give you one more interesting data. Let us talk about country-wise. Okay, so let's talk about Japan. In Japan, from 1999 to 2025, in Japan, the index has given a return of 4.6%. Gold has given 11.3%. So there was an excess return of 6.7%. UK, index has given 4.3%, gold 10.6, excess return 6.3. France, index 4.2, gold 9.3, excess return 5.1. USA, US index 7.8, gold 9.4, excess return 1.6. Turkey, gold index 21.1, gold 29.3, excess return 8.2. Brazil,
Wow.
index 8.2, 14.6, gold, excess return 6.4. China, index 5.6, gold 8.8, excess return over equity in gold 3.2. India, 13.4, 12.5, so there is excess return a negative of 0.9%. But if you look at 15-year period, so I have given you 3-year, 5-year, 15-year, gold is outperforming equity. In terms of even developed and the emerging economy also, gold over a period of 25 years has also outperformed. So this
That's a
is
brilliant
gold
data.
return is.
That's a brilliant data. Thank you so much, Mitesh, for sharing with all our viewers. Now, how do I convince all our retail investors to stay invested in equities is the question now, Mitesh. You do that.
Yes. So now the humble request to all the viewers is that do not look at the gold prices. This is our fundamental hypothesis, Sakshi, at our end. We maintain 30% weightage in precious metal, 15% in silver, 15% in gold. So please have 30% weightage in gold and silver, that is divided by 2, 15, 15, and 7%, 70% in equity. Believe me, when the market crashes, your portfolio will be completely balanced. But this is the most simple strategy, which is the most underrated and underestimated, because people do not want to do boring things.
Okay, that's an interesting one, Mitesh, and I hope everybody is noting these down, and these are interesting trends. For sure, without a doubt, everybody who does not have gold or silver in their equity, in their portfolio, investment portfolio, must have some exposure. That's a clear data point reflection that you have actually seen. But don't just go overboard on gold and silver as well. You have to have a diversified basket. Keep your long-term goals intact with equity too, and keep a balanced portfolio is what we could probably say. Mitesh, do you think for those who are just starting out, record high prices for gold, is it still a good time to start looking at maybe a gold ETF?
Absolutely. Sakshi, if I could have told you that gold will be available at 1 lakh rupees for 10 years before 2 years, it's a laughable figure, right?
Yes.
Nobody believe this, right? So for example, if I tell you that 5 year or 7 year down the line, if gold is available at 2 lakh rupees for 10 gram, still it's a laughable figure. But
yes, absolutely.
See, the fact of the matter which we have to understand is that it's an asset class and the price of an asset class will move up only over a period of time. Right. So don't think that 1 lakh is a too much of a price and it will not go far from here. I've seen a lot of people, my mother and all these aunties are talking in the during the marriages that now it is like 80,000 is too much. It will come down. It is not come down because India is basically a gold lovers country. Okay, so the demand is going to go up only, and that will bring the prices to a higher level. This is a simple logic. So to cut the long story short, as you said very rightly, please have some sort of an exposure in gold. Do not look at the price. So even if you don't have a gold till date in your portfolio, go with gold ETF. Don't look at the price, but at least have 5 to 10% exposure to gold.
Have a 5 to 10% exposure to gold. So that, I hope, has given a lot of clarity all those investors who've been still mulling looking at the prices. What should be your investment strategy and the horizon when you're looking at? So Mitesh has given us, through a future lens, that it was difficult for us to really believe that gold will touch 1 lakh about few years back, and it could actually touch 2 lakh rupees. The asset classes will only go up higher over a long-term period, and that's how the trend has remained historically too. So we'll keep an eye out on that and strategize and go back to your CAs and your financial experts, your own advisors, and redefine and restructure your own portfolios if in case you do not have any exposure to gold and silver till date. Let's move on to see how the markets are shaping up. About 25 minutes are on. What's your suggestion? The beginning of April series is slightly on a higher note, but I think the Nifty has slipped now. 0.3% of a decline has come in. There's some pressure on the benchmark, but the broader market's still holding up. What's the sense that you're getting on the markets now, Mitesh?
Yeah, so if we look at the indices, Sakshi, in the first few minutes of the trade, I think 77 points down on the Nifty and 83 points down in the Bank Nifty is really a good area where one should get into. As far as index trade is concerned, I think this is a mild correction in the ongoing rally. So I think use all these corrections going forward to accumulate the stocks or the indices. One key takeaway is that we are firmly of the view that now market is not going to test the recent lows. So we are on the verge of a very strong up move for the financial year 2025-26. So not advisable to short, and keep some sort of your exposure to indices as well at this point of time. If you are not clear about the sectors of the stock, then the easiest way to participate in the market is through index. So you can buy Nifty Next 50 futures or Midcap Nifty futures or Bank Nifty future, Fin Nifty future or Nifty future. These are the 5 indices available in the futures. You can simply buy it, treat them as a delivery, roll it for the next 3 or 4 months. You will get a decent return if you are not provided that comfortable with the stock selection right now. But advisable to be on the buy side, don't be on the sell side.
Okay, fair point. I hope this has also helped all our viewers out in helping the understanding the strategy at this point in time on the markets. Let's look at some of the moving parts then. On the Nifty, we've already discussed. Let's look at some of the interesting names. Nifty 500 is something let's focus on. We haven't touched that broadest index today. Again, a lot of interesting names with sharp moves that can be seen. BSE is soaring higher now, 11% up. Bear Crop Sciences is up by 8%. You have Inox Wind about 7% up. BEML is another 5.7% higher. Mitesh, you were talking about these defense names, PSU stocks. Where does BEML stand after that stake purchase yesterday? The stock has been only on an uptrend. Should one take a bet now, or is it just let the news flow settle down?
Okay, so let us understand chartically what BEML is advocating right now. So, Sakshi, we had a decent correction from the level of 5,500. To be very precise, the high was 5,488 for the month of July 2024. And since then, we had a good correction. Recently, stock has made a bottom in the range of 2,450 to 2,500. And since we have seen a very strong up move. Now, here, it's clearly evident that since last 3 weeks, the stock is forming a heart of high bottom formation with a good volume, indicating that the stock is now willing to enter into a new trading range. So in last 2 days, the stock has witnessed a good amount of upside, but still I advocate to buy. Reason being is this, that the stock is now trading above its immediate resistance level of 3,200. So going forward, probably 3,150, sorry. So going forward, probably the next target is 4,000. So looking at the next up move and the trajectory, I think that it is advisable to buy BEML at the current level. The only thing is that you buy in tranches, so 50% quantity should be bought right now. And if it comes in the range of 3,100 to 3,200, you buy remaining 50%. But advisable to be on the buy side, and advisable to buy some sort of a quantity right now, because the move of again 700 to 800 point is on the card in the next few weeks.
Okay, got that. So that's as far as BEML is concerned. Anything else before I let you go, Mitesh, that you'd like to highlight? Any key stock sector that one should look at right now?
Yeah, I think, Sakshi, the MNC pack is looking pretty interesting. So I think one should look at ABB at the current level and Siemens for that matter. And second space, which is looking pretty interesting technically, is the entire cement pack. So one should look at, in particular, the Ambuja Cement at 554. I think it's at the current level, 547. It's a clear-cut buy with a stop of 540 for the potential target of 560, 570.
Okay, fair point. I hope this has also helped all our viewers out. Note down some of the key points there. Mitesh, thank you for being with us on the morning edition and sharing with us all your thoughts and ideas, and especially that gold data that you've shared with all our viewers. Thank you so much. Much appreciate. And hope you have a fantastic weekend too. And we'll see you in the new financial year.
Sure. Same to you, Sakshi, and same to all the viewers. Wishing you profitable and a happy financial year 2025-26 and the entire BTTV team.
Thank you so much. And with that, viewers, we wrap up our morning edition. Hope this has really given you a wealth of data points, historical FY25 performance, the current situation of where we are at, the FIIs, how to go about gold and silver, the key sectors and the stocks that you can look at for FY26 as well. A lot of things discussed. We'll get back to the coverage of the markets after a bit. And of course, at 12 noon, I'll be back with answering all your daily calls, queries that you have on your stock-related portfolio with 2 of our top market experts. But hope you have a great time. We'll see you soon on another edition on Business Today Television.
Get ready for the grand finale. After electrifying events in Delhi NCR, Mumbai, Chandigarh, Kolkata, Hyderabad and Bengaluru, corporate leaders reunite for the Silver Jubilee season's last swing. Tee off with honchos and celebrate